Hello, and welcome to the March Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. Boy, February was a tough month for markets. In the last week or so, we've watched as markets just dropped around the world. We're down about 15% here in the US from the peak. We're down about 7 to 10% for the month, pretty much around the world. And this is the worst month we've had in a while. Quite a while, as a matter of fact. It's also one of the fastest declines we've ever seen. In fact, the only thing that did well this month was fixed income, and that's only because investors were really running away from risk, running towards safety. It was a tough month. And the reason for that, we don't have to look that far. It was the coronavirus. Not just the virus itself, because this has actually been out there for several weeks as news, but last month we saw the cases explode in China. And beyond that, we actually also saw cases start to spread around the world. There are thousands of cases in South Korea, there are hundreds in Italy, and there are other clusters around the world. And there's a real fear out there that this was going to turn into a global pandemic, that it was going to be this kind of epical problem that really would rock the economy and rock the markets. And that's exactly what we're seeing, the market reaction. This fear, this expectation that things are really going to get bad. Except that when we go back, we've actually seen this movie before. When you go back, for example, to the Zika virus, we saw markets drop by about 13%. When we saw the SARS virus, when we were worried about that, we saw markets drop by about the same 13%. So when we look at this, when we look at the decline in that context, this is actually pretty normal. And in fact, when you look at other major events, when you look at the declines that follow them, it's typically in the 10 to 15% range. So really, when you look at this reaction, it's pretty normal, and it's not that different from what we should expect. In fact, we saw this only a little over a year ago in December of 2018. So the question is this an abnormal reaction? It's not. It's faster than normal, but in terms of how deep it is pretty normal. The question is, where do we go from here? And here we actually have some good news. Because right now the markets are expecting a global pandemic, but that's not what we're seeing. When you go to China, the number of new cases has actually dropped off sharply. We're actually seeing more people recover from the virus that catch it. So in other words, in the area where we know best what's going to happen, this is a normal epidemic. It was bad, but it's passing. Now the rest of the world, we're not seeing that. It's still expanding. But if we get the same kind of pattern, which we should, in a couple of weeks to a month, we should see the same thing. And when things actually start to normalize, what we typically see is the market normalizes as well. So certainly there are no guarantees. Epidemics don't work on a timetable. But at the same time, when we look into March, we have reason to believe that things will actually get better. We know the foundation is strong. The economy here in the US and globally is actually getting better. And the real risk is whether the epidemic shatters that confidence. As I say, we've seen this before. I don't think it will. That's something we need to watch for. It's certainly a risk, but that's something that is a lot better than the end of the world. With that said, we'll see what happens. Join me next month for the next monthly update. But until then, if you're interested in this, be sure to check out my daily blog, The Independent Market Observer. Thanks for watching.